Hello, this is Dr. Janice SETO, and I'm the instructor for this course in the Canadian Pre-University Program in sunny Subang Jaya. And it's the Taylor's College. It's the semester beginning January 2016. We've been working through some of these homework questions steadily, and we're now up to number 68. And 68 is a big one. It's basically taking what we've learned in the 4 financial statements and how they link, and trying to basically fill in the blanks. This is the second video dealing with question 68. In the first one, we looked at 2000 X6. We came up with all the numbers for these 4 different financial statements: income statement, statement of changes in equity, balance sheet, and then the statement of cash flows. So where is that spreadsheet? That spreadsheet is here. Okay, so again, you see we've come up with quite a few solutions. Now we're working on 2000 X7, the income statement. And what do we have to do now to get the income statement? Well, we are told that, we know revenue minus expenses gives you your net income. We're introducing, the textbook is introducing into us the concept of taxes. So basically, you have your revenues minus your expenses, and that gives you your income, and it's your income before you pay your taxes. And in some countries, the income on the tax on business income is like 35%. Some countries, I think Hong Kong is like 15%. And that's why you see a lot of companies relocating to Hong Kong. I think Singapore, Dubai, etc. Very, very appealing because 15% versus 35%. Well, there is a difference. So what do? We have to calculate. So revenues minus expenses. Then you get your income before income tax. Then you deduct or subtract your income taxes in order to get your net income. That's a lot to get in order to get net income, but we'll do it. We know the income before income taxes, the revenues minus expenses, that gives you this amount. So in order to calculate this amount, we know it's very easy. Let us sum up your cost of goods sold, which is, it's sort of like an expense. For our intensive persons, let's say it's an expense. And so therefore we get this figure of 13,850. So if you take a look back here, there it is. So revenues minus all these different expenses gets you your income before income taxes. Well, now let's calculate income taxes. So let's calculate the net income the income taxes equals your income before the income taxes, and it's 35%, and there you are. So now we'll calculate the net income, which is basically, let's see, this figure, the income, and then subtract the income tax, and you've got your net income of 975. Excellent. Now let's go and, now because we paid attention to the formula, we were able to see that, because I had set this up, net income equals net income. You just go down, see if there's net income come up anywhere else. No, it doesn't, so we're okay. Very, very good job, as I do say so myself. Now, what else is there? Ending balance here, 2000 X6, is equal to the beginning balance of 2000 X7. How do I know that? Well, because we know, and the light purple is light purple. So let make this equal that. Here we are. Now to calculate the ending balance, which is basically what is the equity right now, we take our beginning balance. Now it says shares bought back, and notice there's a negative sign. So if you have shares bought back, but it's negative, basically you're selling shares. I know it's a little bit double negative. So this companies decide to sell shares. And plus now there's net income. And then there's dividends of minus 84. So money left the company that way. So let me just see how we can calculate this. All right, let's just take care of this. So for P, what we want is we want to add everything up. So you've got your beginning balance, your shares which you, negative shares you bought back, which means shares you sold, and then the dividends, which is already negative, and the net income. And so let me do this. Hold on. And so we have 5,120. Let's now move on to doing the balance sheet. Let's save this, because we want to save as we go along. You don't want to lose this information. We have finished 2 of the financial statements for 2000X7, the income statement and the statement of changes in equity. 2 more to go. We can do it. Balance sheet and cash flow statements. So with the balance sheet, remember, assets equals, total assets must equal to the sum of liabilities plus shareholders' equity. So now we're saying, okay, there's a lot of blanks here. So how do we fill this in? We do not lose our heads. We are going to say, what is what? Well, here's one thing you could do. Remember here, ending balance is also, what is the ending balance of? It's the ending balance of equity. And therefore, here's equity. So we know this ending balance of equity must equal the total shareholders' equity here, and we know that. So let's work backwards. All right, so if we know that share capital plus retained earnings is equal to shareholders' equity, let's do some fancy math. All right, so we know the shareholders' equity is there. We have to subtract share capital, and that should get us our retained earnings. So that's pretty good. We're on the right track. Now we know the liabilities plus shareholders' equity must equal total assets. It must equal each other. So let's make those 2 add up. Let's see. So it's the sum of, or well, maybe what we just do is this. So total liabilities plus shareholders' equity is that amount, 14,370. So we're pretty good. We've got total liabilities and total share equity is 14,370. And because A equals L plus E, we know the total assets, it's got to be this. One thing I should point out before we leave the whole shareholders' equity. Notice the share capital is smaller now than it was last year. And why did that happen? Well, that happened because of the shares bought back. Remember, if you have a negative shares bought back, you actually sold shares. So that's why you have fewer shares than you did before. So I'm just going to clean this one up. This is supposed to be equal to that. Great. Good. Got that down. All right, so now we're getting a lot closer. We know the total liabilities is this. And let me just check. Okay. So, and we've got our assets. Okay, let's do some fancy calculation. What I've decided to do is to label in green what we need to find out. And so I'm just going to see if I can put different shades of green. Green, okay, let that be. Now that's cash. And then we've got other assets we have to find. And let me just check. Yeah, we're fine. We've got to find cash. We've got to find other assets. Cash provided by operating activities. That's a different type of green. And then this other one, cash. So what we're trying to find out is we want to find out cash. When we're having problems finding it. So you know that from your math. We're trying to find out how these 3 add up to total assets when we only have 1. So we have to put our thinking caps on and say, Let's see. Well, remember, cash at the beginning of the year is cash at the end of the previous year, so that helps. So let me just fill in that blank. And so now, well, this might help us out. We know cash at the beginning of the year and there's a decrease in cash. So there's a cash at the end of the year. So we know that this equals the sum, open bracket, here. So we know the sum of cash at the end of the year. And that's actually, this is quite easy to do because we know all of this together must equal minus 90. So let me get together and put a formula. So let's do this. So if you look at here, so should be C38 minus the sum of these two put together, which is the income, the net cash from investing and the net income in financing activities, 710, which, as I say, makes sense because you've got 710, you've got minus 2, you use 240 from the company in order to invest. You also, it looks like maybe it was dividends, I don't know, was paid out of the company, so you have a decrease in cash. And from the decrease in cash, from this sum, and that's your cash at the beginning of the year. Now, if that's the cash at the beginning of, at the end of the year, we know when it comes to the balance sheet, remember, which is a snapshot of your financial position in time, this must be that, 1,175. You see how these four financial statements, information flows between them? It's just wonderful. Okay, now we're very close. We have only one more thing to fill out. This, what's the other assets? Well, we know the total assets, so we know it's this. Again, let's subtract the sum of the cash, minus this, okay, let's see, minus the sum of the cash and the property, plant, and equipment should give us our other assets. Phew! We have now come to the end of number 68. I know it was long and involved, but as I say, if you understand how these four different income statement with the statement of changes in equity, balance sheet, and the statement of cash flow helps you understand how to interpret an annual report. This is very basic, of course. One thing I want to point out is part of the reason this company came up with the results it did. Remember, it's got less cash at the end of the year. It does, as a company, it's still valuable. It's a bit more valuable. As you can see here, total assets, liabilities, and equity, etc. It's more than over here. But part of it is because remember they sold shares in the company. The other thing I want you to notice is the revenues have decreased. Why? I don't know. Maybe there's been an economic recession. People aren't buying as many of their products. Maybe their products are overpriced and they're selling fewer. Or maybe their prices have gone down, they're not moving many more units, and so their revenues have decreased. There's lots of reasons, and don't want to speculate. I suppose we could guess, but I don't even know what this company is. But by looking at numbers and comparisons, and this is what we call a horizontal analysis, when you compare year by year. So the same items in your financial statement, and see what's the difference, and speculate and guess what happened. So anyways, this was it's not an easy one, and you need to struggle with it. Take your textbook, write it on a piece of paper, use an Excel spreadsheet, talk with your friends, so that you can develop a deeper understanding of what this is all about. And after Chapter 1, we will be taking all of these different line items and then separating them, and so we have a deeper understanding. So thank you, everybody. I think that we'll do a few more. I think that at the end of the chapter, there's 2 decision cases, which actually are quite fun. So you might want to take a look at those, and we might even take them up in class. But I've just got to the end of the video, so we'll see you in class. And good luck with your studies for the test number 1 on Chapter 1 coming up. Dr. Janice SETO, and signing off.